Mark Barnett Fund's top list of biggest laggards as outflows bite. Mark Barnett's funds have been named and shamed as some of the largest laggards across the investment association universe as they continue to be hammered by redemptions following the suspension of the Woodford Equity Income Fund. The number of funds appearing in Chelsea Financial Services Redzone report, which spotlights the worst performers over 3 years, spiked this year. There are now 230 laggards in the danger zone, up from 188 in 2019 and 187 in 2018. All three of Barnett's Invesco funds made it into the red zone, while his Invesco High Income and Income funds featured in the top 10 underperformers by assets under management. Though Barnett was not the worst performer during the period, his £5.7 billion Invesco High Income fund was the largest straggler in Chelsea's list and was only one of 3 UK all companies funds analysed that lost investors cash. Given the large increase in investor assets this year, we also thought it pertinent to highlight the largest funds in the red zone as presumably they will also have the largest number of disappointed investors. Chelsea Financial Services Managing Director Darius McDermott explained.Barnett funds bombarded by outflows. Invesco High Income returned -0.5% over the period and was the third worst fund in the UK all companies sector on a 3-year view. Its losses were surpassed by another Barnett fund, Invesco UK Strategic Income, down 1.5%, while his Invesco Income fund, which also featured in the list of largest underperformers, delivered a meagre 0.5%. Barnett's trio of open-ended funds have been bleeding cash quicker since the suspension of his Invesco predecessor Neil Woodford's Equity Income fund. Data from Morningstar shows investors yanked £1 billion from Barnett's Invesco funds in the final quarter of 2019. £450 million which flowed out during November when the research house downgraded his high income fund. Portfolio advisor reached out to Invesco but did not hear back in time. HL and M&G funds among losing laggards. Behemoth funds from Hargreaves Lansdown and M&G also featured in Chelsea's list of lumbering laggards. The HL Multi-Manager Income and Growth Fund, which stands at £2.7 billion, ranked 5th on the list, while Tom Dobell's M&G Recovery Fund came in at number 10. The HLMM Income and Growth Fund is one of 6 of the D2C Group's own funds that held Neil Woodford's Equity Income Fund, which suspended trading last June. At the time of the suspension it held 13.3% in the beleaguered fund, but that position had fallen to 10.9% by the end of December. Over 3 years the HL Multi-Manager Fund has returned 15.8% compared with the YA Flexible Investment average of 19.9%. Dobell's M&G Recovery Fund generated returns of 2.2% over the same period. His £2.2 billion fund, which has underperformed the wider UK stock market since early 2012, was finally dumped. For more on this story, visit the news article link.